Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, May the 18th. So happy Wednesday, happy hump day. If you were trading today, I hope you were short because it was an ugly day. I've got the ES up here, and this probably doesn't even show as bad as it was. The SPX is down 165 points. And if you don't trade a lot, you don't realize that's a huge move. The Dow is down 1165 points, 64. Big moves. I mean, these are, that's about 4% right there. These are big moves. Um, so we traded this in at the end of the day, and I had a trade on down here at 3,900, and we got to 30, close 3,907, that kind of thing. But this is a tough market to trade. Doesn't mean you can't make money in it. We've been making money the whole time. I mean, we had actually a really good week this week so far, but this is not the long-term investing market. This is a trading market, and be able to get short or get long, on the fly, basically, essentially. Which makes it tougher. I know a lot of people don't have time to, essentially day trade, and I'm not really a big day trader, but I've kind of defaulted to doing that lately just because that's kind of what's required in this market. We had in the bias portfolio that I run, we had a trade on. It was we actually had a double calendar, and it worked great. It worked fine, and then we shorted down here into the end of the day. That worked great. We did also over the last, let's say 3 days. Yesterday we did a 4100 trade into the close. That worked. We did one here on Monday into the close here. That worked. But again, that's nail biting trading, and it's short term stuff, and it's not something I particularly want to do all the time, but it's kind of the market that we're in. So let's kind of talk about where we are. We use the ES as a proxy. This is basically the S&P, or it is the S&P, and because that's a broad representation of the market, and we'll kind of go from there. So if we looked, what caused this today? It's inflation. We had Powell speaking yesterday. Kind of hawkish. We're going to keep raising rates to get a hold of this inflation. They weren't that interested in getting a hold of it, a year and a half ago when everybody saw it coming. Just simply from, prices going up and all that kind of stuff. Remember how many times they said it's transitory, it's not going to amount to anything, and of course it did. And now they're throwing, everything in the kitchen sink at it, trying to slow it down, and it's not going to work. I mean, I suppose I'm not, I'm not trying to be negative, but if they raise rates enough to stop the inflation, they're going to tank the economy, or somewhere in between. I don't know how they're going to come out with a soft landing on this deal. They might, I don't know. They don't call and ask me for my opinion. But anyway, the point is, from a trading standpoint, or even an investing standpoint, be careful over the next. This is not going to be weeks, not days and weeks. We're talking years, probably. It'll be months and months and months, probably the end of this year, before we kind of get a good feel if the inflation is coming under control and all that kind of stuff. And and that's they're following the playbook, and that makes sense. I'm not saying it's a dumb idea, raise rates to slow it down and all that kind of stuff. I'm just thinking that they waited, this is too little too late kind of thing. But we'll see. I don't know. I'm pulling for them because I want to buy a loaf of bread that's not expensive and a gallon of gas that's not expensive and everything else in between. So anyway, back here to the market, the inflation is causing, of course, big pressure on the consumer and all that kind of stuff. And guess what happened today? So we had Target report today. Boom, big miss. Consumers aren't spending, blah, blah, blah. That's a shocker, right? And what happened to Lowe's reported today too? Boom, 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 down, down, down. Home Depot actually reported on Tuesday, and the quarter was actually good, but of course it's come down with the market and all that kind of stuff. So, everything is kind of rolling downhill. The snowball's already started down the hill, and it's hard to stop it. And it will be hard to stop it. Again, that's why I'm saying, be careful trading this market or investing. Don't try to buy the dip on this market is the thing, the most important thing. So let's look at this and go to, so here's a 10-day chart. Now this red line is a Voodoo Fire line, which is an Elliott Wave line. And as you can see, we rallied up to it and failed. And here, once you get on this side of the thing, that becomes resistance, above you. And a very important line here. Let me show you why. Let's go out on a 1-year chart. And as you can see, we rallied up and failed. And what that means is the trajectory of this is probably, going to keep going down. So we have lower lows, we'll rally back up, lower lows, lower highs, lower lows, lower highs, just like we've done all the way down here. Now, in between here, we will get a big rally like this. They had one there, we had one here, we had one here. We'll have another one, probably a big push up here, and then it'll probably fail. And I hope it comes up here. That's great. This kind of market is much easier to trade than what we're in, this garbage market we're in right now. But for right now, this is the kind of market that we are in, and that's just the way we have to trade it, right? So let me show you. Let me put it in a little more perspective. Let's look at a 5-year chart here. So, where does this go and where does it end? I'm thinking we could come down here. I saw a report today from Guggenheim, I believe it was, and their target was like 29.10 or something like that down here, or potential if we keep selling off. And don't let that freak you out, because that's just a math guess. We don't know what's around the corner. We don't know what's going to happen with inflation, all that kind of stuff. CPI numbers come out I think on June the 10th, I believe. We'll see next Fed meeting, all that kind of stuff. So don't worry yet. This is kind of all part of the nature of the market anyway. But again, from this standpoint, the safest thing to do is, at the moment right now, after we close this trade today, I'm flat. We're in cash in the bias portfolio. So stay light. I would not try to buy the dip until this thing shows us that it wants to move up, and it doesn't. And don't get the head fake. We'll have some moves up that probably won't be sustained. So again, I know I'm throwing out a lot of kind of bad news sounding stuff, but it's not really bad news, because if you trade this instead of investing in this, you can make money, and that's the only thing you can do right now, unfortunately. So stay a lot in cash, be nimble, watch things a lot closer, take profits when you get them, and always watch your risk on the trades. I've been using about half the size I normally do, and still making money. So it can definitely be traded. And we like the volatility, so this is definitely the volatility, and this is that's what's working right now. And again, I don't think this is going to change anytime soon. So the next big things to look for are CPI numbers on June 11th. We've got a Fed meeting on June 15th. Those are probably the next big key dates to watch for. But just grab the popcorn and sit and watch this, because it's going to be like this for a while, I expect. So anyway, hope that makes sense. Hope that helps. If you want to join us in the trading rooms, join us in the main room at Simpler Trading, or join us in the bias portfolio. I have a separate room there at Simpler as well, and we can see what we do in there all the time, every day, all day long. So thanks for the time. I appreciate it, and take care.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me